Morning, everybody. It's Friday, September 20th, 5:26 a.m. Central Time. Grain markets are mixed this morning. Matt Bennett is here. Guys, before I start, I've got to run an ad this morning. I don't do it on Fridays, but I've got to do it. If you are interested in margin protection and you have questions, you should sign up for the premium deal this morning. We did a 45-minute video with Steve Johnson, who's my go-to crop insurance guy, about margin protection. We answered customer questions. He answered and explained it very, very well. This would be a must-watch thing if you're considering it. I'm only doing it this morning. I don't run ads Fridays, but we're doing it because the deadline to sign up is 10 days from now. So if you're considering it, this is something you should check out. Go to standardgrain.com. You know the drill. If you sign up this morning, I will forward you a copy of this morning's email. To kick off the podcast, guys, we have a grain markets and other stuff, college football grudge match tonight. The Fighting Illini will be at Nebraska. Nebraska is an 8-point favorite. Matt Bennett, what is your prediction?
Let's see. If I was betting money, Joe, I think I'd have a hard time betting with my Illini. Here's the thing. Nebraska at home has a distinct advantage. They've got some major they're 3-0 and we're 3-0, and neither one of us know how that feels the last 10 years. And their offensive line's gigantic. So if they run the ball, they're going to win.
Mackenzie is our resident Nebraska fan. She's wearing all red today if you're not watching. Mackenzie, what's your prediction?
Well, obviously, I think Nebraska's going to take it. We haven't played this good, I don't know, maybe since Pelini was here. And it is hard for anyone to come to Lincoln. I mean, we have the best fans in the country, so good luck, guys.
My feeling, not prediction, is that my Illini will disappoint me, as they have done many, many, many times throughout the years. And then come Monday morning, I'll tell my friends, guys, we're a basketball school is what we are. Okay, let's go to this China story.
So Brazilian corn shipments to China have slowed, but China has yet to shift to U.S. corn. China imported 12.6 million metric tons of corn during the first 8 months of this year, a decline of about 16% from the same period last year. U.S. corn shipments to China have gradually decreased over the last 4 years. During the 23-24 season, only 6% of U.S. corn exports went to China. At the same time, 29% of Brazilian corn exports made their way to China. This season, Brazilian corn exports have the potential to decline by almost 25% due to a smaller crop, leaving the door open for U.S. exporters to ship more corn to China. A rise in diplomatic tensions, however, between China and the U.S. will likely stand in the way of China increasing imports of U.S. agricultural products.
Excellent write-up from Karen Braun at Reuters. She's also a great follow on Twitter. So China's bought like no corn. I have this bar graph up here, and they've bought so little that it doesn't even register a bar on my graph. That's how little that they've bought. Matt, do you have any reason, first off, to believe that China will buy any U.S. corn this year?
Earlier in the year, Joe, I thought that would be the case, especially with this Brazilian crop not being as robust as what they originally thought. We've been very competitive on the world market. And so I thought, hey, China's going to step in and buy some U.S. corn, and give us just a little bit of a boost. I mean, quite frankly, Joe, our exports have been a pleasant surprise in the absence of China. So that's one good thing. But yeah, I mean, to be honest with you, it's pretty aggravating to see their absolute reluctance to do business with us. But I think it highlights that, whenever you have diplomatic issues like we've had for quite some time with them, that they don't have to buy anything off of us. They don't want to.
Okay, so speaking of China, Mackenzie, what was the story we ran like 2 days ago? It was like China's grain bins are bulging with grain and they've just got more than they know what to do with. I mean,
yeah, I don't know where it came from, but
I think it was a Bloomberg story. But
okay, yeah, but they've got plentiful grains.
That's what they say, and the Chinese government is essentially encouraging domestic users to buy domestically rather than through imports.
Correct.
So it's just we would love to. We hate to rely on China. We don't like it. We know that. We'll talk about that a little bit more today. But they could give us a big shot in the arm if they were to come in and buy some corn. This is next story, maybe is along the same lines.
So cargo is pouring into West Coast ports in an effort to avoid tariffs. Container imports have spiked this summer in the ports of Los Angeles and Long Beach, coming in just short of the all-time high set back in May of 2021. The two ports combined account for about a third of all U.S. container imports. The rise in imports is due to businesses trying to bring in goods ahead of potential tariff increases. The U.S. will hike tariffs on a number of Chinese products next Friday. A possible dock worker strike at East and Gulf Coast ports also have caused imports to rise.
So yeah, Bloomberg had this chart of imports, and it's been very, very strong. And part of it is that we have these tariffs forthcoming. Matt, I haven't heard a ton of people in the grain industry necessarily talk about these tariffs and any potential response. I feel like there could be one though.
Yeah, I mean, I haven't really heard much about it either, but you would
Doesn't seem
think
like the
that.
market's trading it.
No, I mean, but maybe that's got a lot to do with why our previous topic. Bottom line is you say, hey, we're going to go ahead and put tariffs on. It's like, you know what? Yeah, your corn's the cheapest corn we can buy right now, but up yours, we're not gonna mess with you. And so I do think that those are definitely related. I mean, obviously, there's a lot of talk about if Trump were to be elected, that there would be more tariffs forthcoming, but these tariffs that we're about to experience are already causing us issues. So that's just my opinion. So, I mean, you can argue either side. If you want to get on him, then you're going to have to get on the folks that are running the show right now, because I think that that's caused a huge issue and probably the reason why they haven't bought any U.S. corn this year.
Yeah, I mean, the story right now is that next Friday is the day, the 27th. They're going to hike tariffs on EV imports from China to 100%, and a whole bunch of other stuff is going to like double. So it's not, the trade war isn't just a Trump thing. I mean, it's happening right now, and China could respond. We saw what they did with Canada and the canola thing. They're doing this anti-dumping probe. It's sent the canola market lower. Could do the same thing to soybeans next week. You never know what China's going to say about it.
New crop U.S. corn export sales increased last week. Net corn sales were reported at 33 million bushels. The print was up 27% compared to the prior week, and Mexico was the largest corn buyer for the week. Net soybean sales surpassed pre-report expectations at 64 million bushels. The print was up 19% versus the previous week, and China was the largest buyer for the week. Net wheat sales fell to their lowest level in more than 2 months and came in below pre-report expectations at 9 million bushels. The print was down 48% from the previous week and down 46% from the prior 4-week average. Mexico was the largest wheat buyer for the week.
The book of corn sales right now, it's early in the marketing year, but it's about average relative to the last 10 years. Wheat sales had actually been pretty good up until this week. Soybeans are the problem. And here's my graphic of soybean commitments for the current marketing year to all destinations. It's the second worst of the last 10 years. Only 2019, when we had the trade war with China, was worse. But it would only take a couple of good weeks to get you back to something that resembles normal, Matt.
Yeah, it would. I mean, we just talked about how China's not buying any U.S. corn, but they finally, have been revived over the last 6 weeks, really, buying U.S. beans on this new crop and then now current. But if they do decide that they want to really get active, that's what's going to get you to that point, like you said, that you feel a whole lot better about where we're at as far as where we're at in the marketing year. I guess I'm hesitant to think that's going to happen. I sure hope that it does. I am a little bit concerned about river levels, being able to perform the way that we need them to, as far as being able to get everything out of the Gulf. I mean, I heard there were some beans actually that were sold out of Texas, which would actually been rail beans going down to the port there. That's interesting. There's no doubt though that it's all going to be a little more. It's going to be a little more complicated with river levels getting to where they're getting right now. So if you can't load barges 100%, it's going to make it a lot more expensive to ship beans out.
Because the Brazilian crop keeps getting bigger, our window keeps getting shorter. So we've got 3.5 months basically. We've got up until about January 1st when some of the very early Brazilian soybeans come off. Maybe they'll be a little later this year because they're planting late. But I mean, the window is shrinking. So you've got 3.5, 4 months to do whatever business you're going to do in a material fashion. And a lot of this will hinge on Brazilian weather, which I think we're jumping to next. Yeah, there we go.
We sure are. The driest areas of Brazilian soybean country are likely to turn wetter in October. There is some conflict between the GFS and Euro models with regard to the next 10 days. The Euro introduces rain for Mato Grosso toward the tail end of the period, while the GFS does not. Both models, however, seem to be in general agreement with regard to rainfall during the first 2 weeks of October. The 16-day GFS through October 6th introduces some generalized rain. The extended Euro EPS through October 6th indicates much of the same.
The maps look, I said this yesterday, the maps look more convincing every day that the rains are coming back. What are you hearing on weather, Matt?
Yeah, I mean, that's what we've been hearing for 3 weeks. I stay in pretty close contact with Eric Snodgrass. We text back and forth all the time. And, early this week, I believe on Monday, he said, hey, over the weekend, the maps went a little drier, but he said, I'm kind of unconvinced, and then the next morning he said that didn't take long, and he was back to what he's following was suggesting that whenever you get last half of September and the first October, that um, more normalized rainfall is set to occur. And if that's the case, they're not going to be pushed that far back. I mean, most of them don't even start planning this early. I mean, it's usually closer to the 1st of October anyway. So, I think ultimately this has been a nice little boost, but I'm not sure that this is something that's going to continue to carry us.
Yeah, I'm not. I don't know if it's carried us or not. I don't know if that's why we rallied, or if we rallied just because it was like a post first notice day thing, and we haven't run into the gut slot of U.S. harvest yet. Maybe it had something to do with it, but I mean, it's not like the fund manager isn't looking at this. I mean, they know what's happening.
Right. I'm not saying it's the entire reason we rallied.
Yeah.
I certainly don't think it hurt though. I mean, the
Yeah.
bean market clearly was oversold, first
Yeah.
notice day as you suggest. But whenever you look and say, hey, what if these guys stay dry? I mean, clearly, nobody wants to be caught on the wrong side of that.
Looks like they're going to shift back wetter like they almost always do this time of year.
USDA released weekly drought monitor data yesterday. Hot and dry weather caused drought conditions to worsen throughout the Corn Belt last week. 77% of the region is abnormally dry. Dry conditions are the most critical in Ohio, where 59% of the state is in severe drought or worse. The hot and dry weather is beneficial for corn and soybean maturation. However, pastures, young crops, and recently planted winter crops are suffering from low soil moisture. The High Plains also saw drought conditions worsen due to hot and dry weather. When we look at the percentage of U.S. areas experiencing drought, corn country 26%, soybeans 33%, winter wheat 58%, spring wheat 19%, and cattle country 35%.
There's a lot of color on this map all of a sudden just over the last few weeks. What about crop impact, Matt? I mean, if anything, it's soybeans. Was it too late for soybeans, this late season dryness and some of the heat we saw during, say, the last 10 days of August into a little bit of September?
Here's the thing, Joe. Very common early harvest result type conversation that I'm having with people is that, hey, my soybeans, they're not bad, but they're not what I thought they were. I mean, I've heard that over and over and over. And then the flip side, I've heard a lot of folks say my corn crop is absolutely incredible. And so, you and I have talked about this. Hey, we had all kinds of moisture out through really the 1st of August. And then a few people caught some rain in August. A lot of people didn't. I mean, most people didn't. And so the corn crop, I think, had most of the goods it needed to get to the finish line. And unfortunately, beans didn't. Now, one way that I would describe it on our farm, we had some rain in August, but not a ton. We've got a couple of different fields that we've been in already, that you can see the soil types from the combine. And why is that? Because we had such a dry August. You get into lighter soil and you can tell there just isn't the color in the bean plant. And sure enough, you go from cutting beans that are making, solidly in the 80s to something well under that. We've had some awfully good beans in Central Illinois. I think people know that, but I am a little bit concerned with what bean yields might look like as you get farther into harvest, just due to this weather that we're talking about.
The other impact is the river. And you go back to that drought monitor, the Ohio River Valley especially has been very, very dry. And that's why the river levels continue to decline. The projection is that by like the 3rd or 4th day in October, we're going to be 9 feet below normal at Memphis, which would almost bring you to like recordish territory. You might end up being the 4th or 5th lowest on record. And who knows, you can make new record lows middle of October if the rains don't come back. We haven't had much here over the last 7 days, not in your northern river valley areas where you really need it. And the forecast has, maybe a little bit on like the Illinois, Missouri border, that sort of stuff, but they're not projecting that this is going to help at all.
I mean, like I said before, I think it's very concerning to me, from a standpoint of not only shipping beans down, but fertilizer up the river. I mean, last thing you really want is to see fertilizer get more expensive, especially, we've had discussions on that. It's just pretty tough with dry fertilizer where it's at. We have seen some relief here recently, but I think that if river levels stay low, I don't think that relief is going to stick around. And I do think that it could become cost prohibitive. So, Gotta hope something happens here. I know tropical storm is one thing that we've talked about. We had one there, but it was a little bit underwhelming here last week, and I don't know. We'll see what
Yeah, it
happens.
petered out before it got to where it needed to get to.
Unfortunately.
Yeah.
So the stock market surged to all-time highs yesterday, one day after the Federal Reserve cut interest rates. On Thursday, the S&P 500 gained 1.7% to set its 39th record high this year. Year to date, the index has risen about 20%. The Dow Jones climbed 1.3% to close above the 42,000 level for the first time. The surge was due to the Fed's half-point rate cut. The bold move renewed expectations that the Fed will be able to achieve a soft landing and avoid a recession. Last week's jobless claims, which fell to their lowest level since May, also supported stocks.
See, I thought that they stuck the landing late in 2023 when we made new all-time highs. That was my thought. People keep talking about it because it's a headline. There had been some chatter, Matt, that like maybe following this, you'd see some rotation into commodities, and I don't see any evidence of that.
No, not yet. I mean, that who knows? Is that something that could happen? I think if you saw the dollar really break, which is it's a possibility. Maybe you could see a little bit flow into commodities. I mean, the one thing that you look at like gold making all-time highs here over the last couple 3 days. It gives you pause to think, hey, maybe it's going to flow into the ags as well. But I don't know. Right now, it just doesn't look like it. I think you've got to have more. Of a story when you're looking at big stocks. I know people will comment to me, it sounds like you want the market to go down. I don't. I mean, I farm. I have no desire for the market to go down. But, at the same time, we've got to be realistic that, let's say you cut into this bean yield because what we were just talking about, some of these bean yields have been disappointing. If you cut into the bean yield by a bushel or two, what's your carry out? 450, 500? I mean, that it's still just a little bit burdensome. And we've just got a lot we've got to chew through here. So I think the funds are going to be very hesitant to buy into a story that seems quite burdensome.
When it comes to the rotation story, the idea part of it is that there was like a record amount of cash sitting in money market funds earning interest, and now that cash is earning less interest. So maybe it's going to rotate into something like the S&P, which has obviously performed better than earning 4.5% on a CD or whatever it is. So, yeah, we'll see what happens. I mean, I guess it's possible that you see a commodity rotation. We just haven't seen it yet. Cattle were higher yesterday.
They sure were. Live cattle were up 35 cents to $1.67 higher. Feeders were up 210 to 382 higher. We do have a cattle on feed report coming out this afternoon. On feed as of September 1st is estimated at 100.9% of year-ago levels. Placements in August are anticipated to be 99% compared to last year, and marketings during August are expected to be 96.6% of year-ago levels.
Is the correction over and now it's a bull market again, Matt, or no?
I don't know if it's a bull market, but it sure feels better than what it did for a while. I mean, I think it's more of a consolidation type phase. I don't know that you're going to race to much higher levels, quite frankly, but it sure feels like the major selling is over with. But that's just kind of what I'm thinking.
Outside markets this morning, guys. U.S. dollars up a little bit. Stocks are mixed after a big day yesterday. Gold's up $21. Crude oil's off 39 cents, and the November WTI 70.77. Have a great weekend, everybody. We'll be back on Monday.